Hey everyone, it is Evan here from the Trade Risk on Friday, May 3rd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump right into our dashboard here and take a look at the strong rally we saw here on Friday to finish off the week. All of the major indices about 1% higher, IWM up almost 2% on the session and breaking out above some significant technical resistance. We'll talk about that in just a moment. 5-day change numbers mostly back in green territory after the sort of shaky start to this week, and then we are above most of the simple moving averages here in the major indices. If we scroll down and take a look at what's the sector composition here, it's semiconductors, which is on the top now, outperforming, leading this rally here, 1.62% over the past 5 days, followed by financials and healthcare. And on the downside now, we have energy, we have materials, and we have consumer discretionary, which are the bottom three and the only three that are in the red for the past 5-day change numbers. As far as major markets go, we still have the VIX here on top, 2.36% rally, but much of the VIX's recent pop came out of the market today on Friday's trading, but we're still positive here over the past 5 days, followed by emerging markets and China. And on the downside, we still have USO, natural gas, and silver, that commodity side of things, still holding on the relative underperforming list. So let us jump into the charts here. With the S&P 500, this is the cash market. This is the weekly time frame. This is where we like to start our analysis. And, really the theme of the takeaway of the last several market recap videos since last Friday actually was this notion of price acceptance now that the S&P 500 and the NASDAQ composite have rallied to new all-time highs. The question and takeaway and analysis we were looking for was, can they sustain all-time highs? Do we actually see price acceptance at these levels? And so far, based on the close, based on this recovery that we saw on Friday, the answer is yes. We did continue higher this week, very slightly so, but still holding up at new all-time high levels. Notice the tail and range of this week, however. This was not it was not just a fully sideways or up week. We actually did start to dip here intra-week, and we did come all the way down to last week's lows, but we did get that bid. We got that nice recovery to come back into the market here and reinvigorate things on Friday. So bulls keeping the dream alive up here. We are continuing to hold all-time highs. We continued above last week's close, and the lows from this week now I'd say are going to be pretty important, especially when we start to look at the daily charts. That's really what we're going to want to see us hold above, but the longer and more time we can spend above and at these all-time highs, signaling that we have acceptance and trading at these levels, the more constructive it is for an eventual breakout, for trend continuation to the upside here. So the thing we're still looking for is that abrupt sort of move off of this area one way or the other. But as it stands on this longer term intermediate weekly time frame here, we still have a MACD that is at highs. We have price that is holding up, and 2872, that's still the bigger level. This week's lows will be important, and then 2872, that's still the area I'm paying attention to, and the trend does remain higher. If we go down to the daily chart and take a look at what went on this week, it was really, Wednesday's action that really gave us pause here, because we had an outside, basically a bearish engulfing day, not quite or just about, but basically an outside reversal day here to a bearish engulfing day, which basically means we opened above the prior day's highs. In fact, the prior 2 days' highs, we failed up there and we sunk and traded all the way down, basically encompassing the prior 2 days worth of trading. And we did try to get follow through on Thursday. We did get intraday follow through, but notice how this candle finished up is we really just could not see sellers hold this market down to the close of the day. They did take a nice kind of follow through throughout the intraday, really kind of shaking out, running stops, shaking out those weak hands, sucking in the aggressive shorts, and then by the end of the session here, we were trading back up, still negative on the day, but much closer to highs. And then, of course, with Friday's strong rally right back to the top end of this range, the bulls just basically demonstrating control and holding of support and alignment with the major bull rally that has been in place, the bull trend that has been in place throughout the course of 2019. So going forward here, when we look at S&P 500 on the daily chart, we'd really be now keying off of Thursday's lows. That comes in right around right at 2,900, the figure. That does sort of coincide with some chop and support back here from the second week of April. So 2,900 for you active short-term traders, that's going to be an important level to now pay attention to, something to trade against, if you will. And then that 2,872 level, which we discussed just a moment ago, would be the next kind of support below us. So those are the levels I'd be paying attention to. And of course, now that we closed at daily closing highs here, just about, we just basically have the intraday high here from Wednesday above us around 29.54 for us to take out and continue this trend to the upside. Maybe a little bit of sideways continuation, or a little bit of sideways chop continues here for the start of next week, but this nice thrust and hold of support, recently demonstrated support now, is something that bulls can hang their hat on and we can trade against as active traders. Now, the real story, I think, and the real interest here was the IWM. And if I switch over to my other board here, this was where we've really been sort of paying attention and keying off of, because the IWM has been lagging recently. It hasn't been making new highs with the market. It's not trading at its prior, 2018 high. It's still approximately 7 or 8% off of its all-time highs. It was in fact stuck here around the fourth quarter 2018 highs. This 160 resistance had been holding the IWM back for the past couple of months. And in fact, we almost got, again, that thrust away. We had that fake out intra-week where we saw some volatility on Tuesday. We saw a thrust lower here on Wednesday. And then we had this brief attempt of follow through on Thursday, but sellers could not hold it down. And in fact, we did pop back up to positive, and then we had this very strong follow through and breakout day on Friday. So an attempt to break down, we in fact tried to short this here. We put on a half size short on Wednesday's move lower, and we were quickly stopped out right at the open on Friday. So we took a shot here on looking for that thrust away from resistance, trading against resistance here on the short side, and it didn't even it lasted all of one full trading session before we threw in the towel here at the open and said, this is not working. Bulls are back in control, and it's time to respect that. So for the Russell 2000, this is absolutely now going to be the market to pay attention to, the bright spot for the bull case, because if we do consider that the S&P 500 takes maybe even a back seat here to this overall market, and we let the IWM sort of drive us to new highs or help kind of continue this market higher, this is what we're going to want to pay attention to, is this breakout here. And again, as encouraging as this looks, we'll still always want to keep an open mind and say that if we do suddenly lose this, if we reverse all of this action, if something happens next week where price rejects these highs and we come, smashing back below this resistance, that would be a change of character. That would be something to take note of, and we again should respect that if it happens. It's certainly not a prediction, not saying it will happen, just keeping an open mind that if things suddenly do reverse, then we should be aware of that. Otherwise, I think it is prudent to respect this breakout, to look for the IWM to help lead us here, because this is what the past Thursday and Friday's action suggests. So if we go to the NASDAQ 100 as the final index to look at here, you can see this looks very similar to the S&P 500. We basically have sideways range going on here. We had Wednesday, we had that kind of outside reversal day. We had a reversal or a little bit of follow through on Thursday, and then we had the pop higher here on Friday back towards these prior highs. If we look on the weekly chart here, you can see price acceptance continues here, trading at all-time highs, and we would want to just be continuing to watch this week's lows. So all in all, that's the story. We saw volatility come back down into, I think, close right around 13 again. So we saw the VIX got as high as 16 intraday on Thursday, and then it lost about 18% from the highs on Thursday to where it closed Friday, and bulls are continuing on the trend. We've digested a lot of earnings season. The bulk of it, or the thick of it, is past us. We still certainly have companies that are going to be announcing next week, so it is something we still want to be aware of, but for now, life continues to look good for the bull case. Now, jumping into TLT and some of the other major markets here, you can see TLT on the week was flat, so we really didn't go anywhere, just kind of chopped around here. It's still holding above this 122 area, which is what we want to see happen, as if you are optimistic, if you are encouraging or bull on this market, we do still have our long position here in TLT, so we are long this market, still looking for higher prices, and so far giving it the time it needs to hold on to that area. Now, USO here did not have the most encouraging week. It did rebound a little bit, but another follow through week to the downside. Last week was the ugly outside reversal for it, and then we saw a little bit of follow through this week. Volume coming in fairly heavy. If we go to the daily chart here, we're starting to hold below that $13 area. All this is to say that, look, this has enjoyed a really strong run throughout the course of this year for USO. So this type of move lower isn't anything that should be too alarming, given the fact that this has returned 50% or whatever. Let's see what the actual percentage was from about the start of the year. Yeah, close to 50%. And now if it's suffering, let's see, at this time, about a 7% pullback, I think that's pretty reasonable. 50% higher, 8% down. Seems like a intermediate uptrend to me. But if this weakness continues, then, perhaps then we have, perhaps, the trend resumption, or this impulse leg back from the end of 2018 really starting to maybe take back control of it. But one day at a time, we'll see if this rally can hold itself in right along this sort of this trend line here that's been holding up. You can see we're below it right now. We'll see if the bulls can step in, see what happens with this volume, but a little bit of uncertainty, cross currents going on there for USO. Natural gas kind of pulling back a little bit this week. Remember, it had that nice kind of push off of these lows. This has been, really beaten up. It's trading near its year-to-date lows, starting to give a little bit back now, and really just seems like a pretty messy market here, and sellers still overall very much in control. If we go to metals next, you can see gold still dancing around this pretty important 121 area. This is where we had found support all year. We broke down briefly. We kind of popped back up, and now we're just chopping right around here. So gold still kind of making up its mind, still favors the sellers here. But if we can get a strong pop above 121.50, 121.60, then that could suddenly change pretty quickly. And silver's pretty much in the same boat, broke down below $14 support, trying to get back up it and testing it again. So be interesting to see how this finishes up and how this follows up next week in both of the metals situation. Last but not least, let's take a look at sectors here. Take a look at the best and worst performing on the week. So if we go and sort this, we have semiconductors up top. Remember, semis did pull off last week. We saw this move lower from highs to the low here, about 6% of a move lower here. And again, semis have enjoyed a tremendous rally over the past, of course, this year, but certainly even recently has accelerated to the upside. It's still trading at all-time highs here for the SMH, and you can see it is trying to find support at this, this support line that's been in place since March, or this lower level trend line anyway. So for now, I think 115, as long as it it stays above there, then it looks like that pullback is contained. If it starts breaking down below 115, then you're going to be a little more cautious there. Financials continue to work here ever since breaking up above $26 or $27 or so. XLF has been grinding higher. There's a lot of supply in here to the left, but it looks like we're comfortably kind of making our way to the top end of this range. Perhaps $29 or so is the overhead target that this is rallying to over the next coming weeks or so. Financials, though, continue to just grind higher here, not too extended to the upside, really kind of taking their time and just working themselves higher. So constructive action there. And healthcare really recovering a lot of this very violent move that we saw here 2 weeks ago. Remember, we saw this very quick 2.5 day breakdown here of about 8% to the downside, and now over the course of 2 weeks we've recovered about 80% of that move. So very impressive, lots of volume coming in here, and XLV still kind of in a tough spot, but recovered a lot of that damage, and you got to give them credit here for getting us back up towards these highs. We'll see how price acts above around 91 and coming back into this prior supply here from March. On the downside, we had XLE suffering a pretty notable breakdown here. Even though USO, certainly we did talk about the the pullback here, 8% down, but remember, this was up 50 or 45% throughout the course of this year, so an 8% pullback should not sound like the end of the world there. XLE certainly taking it a little harder, though, as this breaks down from this very orderly kind of slope of support here. It has been grinding higher, much slower pace than USO, and this is breaking down on some heavier volume, so some concern here for XLE. The energy sector looks to be in a tough spot there. Would not really want to be playing that too much one way or the other. XLB here also on the bottom of the performing list this week, minus 0.7% on the week, coming back down and retesting 56. In fact, technically, this is where you'd want to see buyers step back in. They seem to be doing that. So for me, we're going to look for this retest to sort of hold here, and there might be some interesting names setting up in the materials plays, so keep an eye on that. And last but not least is discretionary, down slight on the week here, but all in all, really doesn't change a whole lot. It's still basically consolidating just under its recently made all-time highs, so not much else to say about it except for maybe looking for this to perhaps extend itself, a little more of a sideways consolidation, be perfectly reasonable and healthy in my mind. We'll see if we get that. Otherwise, no, not much else to really comment about it. So that is it. That is the recap for this week. Hopefully you had a good week trading, and enjoy the weekend. Thank you so much, as always, for tuning in and watching. You can subscribe on our YouTube channel or follow us on the Trade Risk blog. Have a great weekend, and we'll see you next week.